Welcome to the Rousseau Report. I'm your host, Dennis Rousseau. Today we're going to address market direction, where there's certainly a lot of opinions regarding the state of the pre-owned business jet market. I have some ideas and methodologies I'd like to share with you, but keep in mind, aircraft markets don't just rise or fall overnight. There are precursors. This portal provides a little bit of everything, from the national debt, GDP, consumer credit card debt, full-time workers, all in real time. A good deal of this micro and macroeconomic data is very helpful in pursuit of market direction. Let's take a look at a data point that reverberates in multiple directions, and that's the employment picture, specifically layoffs. The data set on the left shows the number of layoffs in all of 2024, compared to just Q1 of this year. And we're only tracking companies with layoffs of 500 or more. These companies reside in practically every industrial classification: finance, tech, shipping, manufacturing, pharma, and neither chart accounts for the hundreds of thousands of federal workers that are being laid off or are about to be laid off who will be looking for work in an already stressed out market. High unemployment lends to a decline in consumer spending, which in turn slows economic growth. When consumers lack a steady income, they turn to credit cards, which are currently at a record high of, dig this, $1.2 trillion. Over a 10-year span, credit card debt has doubled, and that leads to defaults, which just hit the highest level since 2008. In the first 9 months of 24, credit card companies wrote off $46 billion in delinquent balances, the highest in 14 years. All of this parlays into other markets, such as new automobile sales, which also contributes extensively to the U.S. economy when you factor in ancillary services, such as tire replacements, oil changes, engine repairs, airport parking. In normal times, consumers are buying, on average, 17.5 million new cars a year. For the last 3 years, we're averaging 15.7 million. Pre-owned vehicles constitute 75% of all car sales. They peaked in 2021 at 43 million, and by 2024, that number dropped to 39 million. Let's now factor in residential real estate. From 2012 through 2020, the number of home sales was averaging 5.5 million per year, reaching a high of 6.5 million in 2021. Year-end 2024 were just under 4 million. And very similar to aircraft markets, the only thing certain about this market is extreme uncertainty. I've covered the commercial real estate debacle extensively in past sessions, so I'm not going to spend too much time on that segment because it continues to get clobbered. By way of example, a 16-story building in San Francisco was purchased in 2016 for $62 million. It sold last year for $6.5 million. And this parlays into another sector, real estate loans. Lenders stopped making CRE loans for the last couple of years as occupancy rates triggered delinquencies and foreclosures. One of the largest lenders in this space is U.S. Bank, who reported $780 million in delinquent loans. Local economies rely heavily on office business districts for taxes, jobs, growth of small businesses such as bars and restaurants. As a side note, the GSA was recently tasked with selling more than 500 federal buildings out of the 8,000 plus the government owns. To top it all off, a major financial institution just made the statement: the 2025 commercial real estate outlook is largely optimistic, with robust performance in the industrial sector and steady retail growth. I don't believe they were aware that U.S. retailers closed over 5,500 stores in 2023 and over 7,000 last year. And if they looked at their own industry, they would know that 1,043 bank branches were closed in 2024. All of these data points parlay into business jet markets and values. One of the many economic dynamics that we examine to determine market direction are industrial classification of buyers and sellers. If you're in the CRE space and own an aircraft, it's probably for sale. In tough times, the first thing most employers reduce is headcount. And after laying off 1,000 plus people, the last thing you want is to be seen flying around in a multi-million-dollar business jet. Now, considering all this data, allow me to recite the new meaning of a recession according to the National Bureau of Economic Research, who declares recessions. Informally, at least 2 quarters of declining economic output. But the recent technical definition by the last administration is, quote, a significant decline in economic activity that lasts more than a few months. The measure is based on employment, income, consumer spending, and industrial production, among other criteria. An economic slump is generally accompanied by hundreds of thousands or millions of job losses, unquote, and I'm not kidding. As you've heard me say over the last few years, we've been in a recession and it only continues to worsen. Now let's switch gears and look at business jet data. Each week, Aircraft Post generates a market synopsis similar to this, showing the number of aircraft that came on the market, number sold, withdrawn, and of course price changes. And the ratio has looked very similar to this for the past couple of years. A key data point in determining market direction is the number of year-over-year pre-owned transactions and which category dominates. Although mid-size sales tend to lead, in 2024, the large jet category surpassed mid-size. Over the last 5 years, we've averaged 1,000 transactions per year. That's pre-owned. If the total dips below that, there's generally a pretty good reason for the decline. 2022 was the year we experienced a 20% decline in the number of pre-owned transactions. However, that's also the year prices increased regardless of category. Before we look at specific pricing data, I'd like to ask you a question. Consider the fact that there were 109 pre-owned transactions in Q1 2025. Would it be safe to assume the total for the year will be about 450? Stick around for the answer. Now let's speak to a major factor in business jet sales, and that's price. If you bring your aircraft to the market with an unrealistic price, expect market rash. However, let's define unrealistic. And this is where access to market intelligence is critical. As a precursor, the key to pricing is knowing what the market is doing in your specific category and model, as well as competing models. The aircraft of your model in the center has been selling for $12.7 million, so why would you have an ask price of $19.9 million? Then prior to being withdrawn from the market, the ask is lowered to $11.4 after 2 years on the market. However, by that time, the aircraft has garnered market rash, and potential buyers will look at the days on the market and pass it up, assuming something is wrong with the aircraft. The other examples also depict ask prices, well above where this year model has been selling. Of course, one contributed to high ask and sell prices inventory, or lack thereof. As can be seen here, the pre-owned market hit one of its lowest inventory levels in 2022, similar to that seen in 2008. To better illustrate, let's look at one popular model, the Challenger 6 Series. The market was run up prior to the dot-com bust and the financial crash in 2008. In both cases, 1998 vintage 604s were selling for 10% more, dig this, than they cost new after 10 years in service, only to readjust to some semblance of normal market depreciation 1 year later. Now consider this. If you had to purchase this aircraft in 2008 for $20 million and had to sell 2 years later for $9 million, that would be regarded as a very uninformed purchasing decision. A similar scenario happened in 2022, where prices were run up to near double what they were selling for in 2020, from $3.4 to $6.3 million. Let's pause here. If this is all the information we have, I would think it would be safe to say market prices continue to rise. So how do we determine market direction from this data? Firstly, let's keep in mind business jets are depreciating assets, and as such, they will lose value year over year. If the market gets run up, you need to be aware as to why it's happening, and also realize it will correct. The popular G550 is another example of erroneous pricing. If we look back at 2008 pre-owned pricing for a 2004 year model that exceeded the cost new by 35%. Fast forward. The market was $12.1 million in 2020. By 2022, they were selling for $17.1, a 42% increase. And most buyers were probably told this appreciation will continue. What they were not told was the $17.1 million had now adjusted to $14.1 and will continue its downward trend. How do we know that? Because there are two 2004 year models on the current market, with one asking $12.9 and the other $13.9 million, and they generally sell for 7% less based on historical data. Now, there are cases where aircraft sell close to their ask price, but in general, if the aircraft is priced right, you'll see a plus or minus 7% delta. One further note, where you see the ACPV, or aircraft post value, at sale, this is based on a 30-year end of life where you start the process with the average cost new and depreciate it year over year to the sum of the parts. And why do we employ this methodology? Look no further than legacy aircraft. they reach technological and economic obsolescence. Case in point, a 1986 G4 that sold new for $17 million recently traded for $900,000. 1989 Challenger 601 traded for $615,000. In both cases, 5% of their original cost new. Now let's move on to current generation aircraft. 2010 7Xs sold new for around $47 million, then traded on the pre-owned market in 2021 for $15 million. And last year, 2010 year models sold for $12.1 million. That tells us the market is going up, right? Well, if you purchase it for $15 million, you're probably thinking, I should buy and sell aircraft for a living. Let me tell you, don't quit your day job, because there are two 2010 7Xs on the current market with an average ask of $18.5 million, indicating they're probably going to sell in the low 17s. Let's look at a 2013 year model G650. In 2020, this year model sold for $31 million, then $41 million in 22, and $32 in Q1 of this year. Great, the market's still going up. No, it's not. Because there are two 2013 year models on the market with an average ask of $31.9 million that will probably sell in the $28 to $29 million range. A similar end result is playing out with one other ultra-long-range model, the Global 7500. Although with limited resale data, market depreciation is following a somewhat normal trajectory, which based on current ask prices of $58 to $60 million, should yield a selling price in the mid-50s. Keep in mind, for the first few years in service, there was one available aircraft on the pre-owned market. And today, there are 10. On the opposite end of the spectrum, the PC-24 has been having a great run with new aircraft deliveries, with 282 aircraft now in service. Considering the aircraft is only 8 years old, of the 15 on the market, 11 are 2020 year models and newer. And we're beginning to see an increase in available aircraft. The same scenario is playing out with the CJ3 Plus. 15 on the market, 10 are 2020 and newer. Generally, when we see late year model aircraft being placed on the market, that's fairly indicative of economic and aircraft market confluence. The G200 was a great aircraft for its time. However, production ceased in 2011, replaced by the G280. Similar to most business jets, the aircraft had a price run-up of 41% in 2022-2023, only to retreat this year, matching the selling prices in 2019, 2021, and 2025. We expect further price erosion this year, as there are now 38 aircraft on the market, representing 16% of the fleet, with an average 300-plus days on the market. One reason for drawing a corollary between the conditions of 2008 and 2025, both were and are being fueled by global economic conditions. Now, before we leave, let's answer the question posted earlier. If there were 109 transactions in Q1 2025, would it be safe to assume the total for the year would be about 450? The answer is no. Due to the fact that in almost every year, transactions stay fairly consistent in the first 3 quarters of the year, then peak in Q4. For the Rousseau Report, I'm Dennis Rousseau. Thanks for tuning in. See you next time.